Happy Friday, everybody. Welcome to MarketStream.live. My name is Joseph Cusick with the Cusick Group, here to check out everything that's hot on the U.S. Open. And let's take a look. Again, we continue to see a ton of data coming out globally. But here in the United States, we had first quarter GDP. GDP growth was weak, but a little bit weaker than expected. Came in at 0.7%. Expectations were right around 1.1%, as we discussed last night on the closing bell. What was interesting, though, is that you saw personal consumption, the PCE component of the GDP, was also weak. As a matter of fact, it came in at 0.3%. That's basically the weakest number that we've seen on personal consumption in about 7 years. Now, we're going to take all of this GDP data with a grain of salt. First quarter, this is basically just the remainder of the policies and so forth from the Obama administration and their economic package. The first 100 days of Trump has basically delivered nothing at this juncture. So at this point, really what the focus as far as GDP is going to be concerned is going to be looking at Q2. But with that being said, you're starting to see that the markets are reacting. You see that the Dow Jones right now basically down 14 points at 20,967.60. Again, you're just seeing a big grind up here. The catalysts just aren't playing out right now. You're seeing spectacular earnings from Microsoft, Google, Amazon. Just not catalyzing the market at this juncture because of the fact that you're seeing really mixed economic data. As we discussed in Asia, you had mixed inflation data as far as out of Japan. You also, in Europe, you saw the Eurozone inflation actually picking up, where in Japan it was actually a little bit less than expected. Here in the States, you're kind of seeing that this growth factor that was really presumed to kick in because of the fact that Trump was going to put together some pretty impressive new policies in place to really spur the economy. Well, nothing's really happened. We have no health care. We have no tax reform. We have no infrastructure play. Really what we're seeing is that really solid earnings. You know, we've had quite a few. As a matter of fact, I think I'd say probably over 35, almost 40% of the names have reported so far. And so really what you're seeing is a market that's a little bit uncertain. We need a catalyst. We need something that's going to really push it up. Plus, don't forget, look at the S&P 500, basically trading off of its best levels for the session, but down a penny, right? So flat, even though we've had pretty decent numbers and really good earnings numbers out of some large cap names. But how far can these large cap names, the 4 or 5 names that we always hear about, whether it's Facebook, Amazon, Google, Netflix, you name it, how much further, CAT, right? How much further can these take us without starting to see what is going to be coming down the pipeline in the next 2 to 4 quarters? The NASDAQ, though, is holding up the best out of all of the indices, up 20 points at 55.91 on the NASDAQ 100. You can take a look at the comp. I watched the NDX. The Russell 2000, though, this has been a leader this week, the small caps. But basically with this most recent economic data, it opened up on its lows and continues to go lower. Down 2 points, down about 279 right now at 1414. Again, well above. All of these major averages are well above the 20 and 50-day moving averages. So don't let me start to paint a picture that the bears are starting to take control. By no means are they. It just means that there is no catalyst at this juncture that is really spurring on any new buying from new entrants. As a matter of fact, where you want to keep an eye on that, I'm not even going to touch the VIX, which is up slightly, and the dollar, which is down about 21 cents. Crude up 14 cents above that $49 level. But you saw the bonds. Initially, after the data came out, you saw the 2-year. It actually upticked a little bit now in the red. You have the 10-year up about 8 ticks, and you have the 30-year up about 9 ticks. So a little bit muted action in the bonds. Bond prices go up. That means yields go down. As I said, watch the 10-year yield. That is going to be a good barometer of how the real large money is looking at the overall equity markets and market in general, as well as the economic forecasts. As this data keeps rolling off, the bonds are going to kind of tip our hands. And right now, you got the yield at 2.287. So it's under that psychological 2.3%, which is actually the 20-day moving average on a daily chart for the 10-year yield. Keep an eye on this, folks. If we don't see this yield stay above 230 and we see any sustained push down lower and a challenge of 220 again, that could be negative for the equity markets. That means that there's uncertainty in the marketplace that we weren't anticipating or what the market wasn't anticipating, especially at these all-time highs. All right, folks, that's it right now for What's Hot on the Open. Join me at 1:30 Eastern Time. I'm going to be going over some really cool strategies here at MarketStream.live that you can incorporate it into your portfolio. See you then.